Everybody knows the Santa Claus rally, but do you know the opposite? It's called the Grinch. Will we have a Santa rally or the Grinch this year? Let's discuss. My name is Dan Slim, and welcome to another episode of Monday Market Up. Last week, the BSP governor reiterated its hawkish stance, announcing that PH rates will stay higher for longer as the BSP continues its fight against inflation. The policy rate remained unchanged at 6.5% when they met last December 14. And I agree with the governor as I think there's still inflation risk ahead. We did mention that the possible effects of El Nino in the coming year could affect rice prices. Currently, rice prices have increased by 2 pesos just this month, and our rice and corn production are at a high risk of being affected. So while the government has committed to importing rice, this is a global phenomenon, so we can't exactly expect other countries to be exempt from El Nino. Also, we pointed out that oil prices have hit a critical demand zone here at 67, 68, and has currently bounced and is steady at around 74. So we could see oil hitting 78.30 if geopolitical tensions and supply chain issues continues to arise. But and guess what? Shipping costs have started to soar as Houthi rebel attacks at sea has caused a disruption in the global supply chain. Hundreds of ships are being rerouted from the Suez Canal to longer routes just to avoid the Red Sea. Along with this, insurance costs, of course, for shipping has also increased. So these factors may start to introduce some headwinds into our inflation numbers. The Development Budget Coordinating Committee has reaffirmed the government's GDP growth target for 2023 at 6 to 7%, despite analyst forecast of around 5 to 6%. They have a more optimistic outlook for our GDP growth at 6.5 to 7.5% for next year. But, as the economy grows, we also run the risk of inflation remaining elevated vis-a-vis our 2% to 4% target. Currently, our inflation is expected to settle at 6% for 2023. So we are actually a long ways off from the 2 to 4% target band. Now compare this with US inflation for 2023, which is around 3.1%. They have more reasons to celebrate, especially after the Fed's preferred inflation gauge PCE index continues to go down in the latest reading. Core PCE came in cooler than the 0.2% expected at 0.1%. Also with GDP coming in at 4.9, well below 5.2%. Analysts are continuing to price in a Goldilocks scenario for 2024. Now, the Fed watch tool probabilities continue to surge towards a 78% chance of a rate cut as early as March of next year, followed by strong probabilities also in May and in June. At this point, the market continues to price in one, two, three, four, five, six rate cuts by next year. So the Philippine 10-year bonds currently stands at 5.9%. And comparing that to the policy rate at 6.5% may not be able to be as aggressive in the US, where the 10-year yields have gone down significantly to 3.9%, which is a long ways off from the current 5.5% policy rate. So let's look at the PSEI charts. The index ended on a positive week, ending at an almost even 6,501. I was actually expecting the markets to go down a bit because of the long weekend. We have 4 days off, but the green candle here on Friday could be a good sign that unlike before, where investors were cautious about leaving their investments during long weekends, there seems to be a bit more confidence this time around. And with 3 trading days left for the year, could we see this confidence push the markets towards 6,700, or will investors lock in profits to end the year on a high note? So just a quick look forward into some possible stocks for 2024. No? BDO, BPI, and Metrobank stocks may have played out for 2023. So some analysts are saying that we might rotate into some of the banking laggards for 2024, specifically Union Bank and Security Bank. So Union Bank here has been quite the hated stock for 2023, I must admit. No? But with some one-time expenses out of the way for Union Bank, we could see much better return on equity for Union Bank in 2024. Could this be a good rebound for Union Bank as it has tapped to critical support level and is currently steady at around 48.60? Now, Security Bank here not looking as good as Union Bank as we see Security Bank tap its 67.90 support, which runs all the way back to 2011. Also, consumer discretionary stocks may also see some positive upside for 2024. As we see rates taper, we could see some discretionary spending. Of course, JFC and GT Cap are analysts' favorites. This GT Cap formation here, if you look here, this formation here could be a head and shoulders pattern. Usually the height of that head and shoulders pattern, right, translates into its next resistance zone, this time at around 674. So again, rates going down bodes well for REITs and property stocks. A REIT, right, bounced nicely off of its 28 peso lows. Congratulations if you were able to buy in at this level. So were you scared, no, when this went down? But it's currently at 33 where it's supposed to be. Also, Ali and SMPH doing pretty well. Look for some opportunities to ease in every time it corrects. Some investors also try to look into some laggards, especially index laggards for possible bounce plays for the next year. We all know that the current year's favorites rarely translate into the next year's favorites. So it might hold true for the opposite, right? So last year's laggards may not also be the next year's laggards. So we could be looking at some opportunities for growth here, no? So, but concentrating the selection on index stocks give us some measure of safety as they would be quality companies. We could be assured of some type of liquidity, right? So let's look at some 2023 laggards for the PSEI. We have ASEN and Converge at the bottom with a whopping 48% and a 46% drawdown. In order to recover that, guys, this stock needs to double for 2024. Next, we have Monde, Wilcon, Globe, JG Summit, Pure Gold, DMC, SEC, and AGI. So all lagging behind the PSEI. Personally, my choices for a bounce play here would probably be Monde or JGS, right? SEC and DMC, they were our stock picks. But you see their trailing 12 months dividend is 24%. So it probably makes up for this drawdown here. But as we've said for SEC, our trading strategy for SEC really is to buy after the X date and sell before it gives the dividend, right? So again, this won't work. If you buy before the X date and get the dividend and sell after that, the drawdown here is bigger than the dividend return, same in this case. But instead, what we did last year, if you remember, we bought here, it went down. After 1 month, we bought in, we sold before the X date here. So this is like a 7% gain. Next, we bought here after the drawdown here. We bought here at around 27 and sold during its X date, before its X date, foregoing the dividend for a 31% gain. So we didn't actually do that bad for SEC and DMC, right? Now, could SEC still experience this uptrend? It's highly unlikely as coal prices have already gone down. Could SEC give the same dividend yield, 24%? Also highly unlikely. But we are still looking at the 10 to 12% dividend range for SEC. So it's still not bad. Can we do the same strategy for SEC and DMC moving forward? We possibly can, right? So Right now, it's trading along this band. So hopefully it stays within that band, and you will just have to monitor if SEC continues to hold this critical support level. I think it will, given that SEC is relatively cheap right now, a very attractive dividend play. Let's go to the S&P 500 chart. The S&P 500 notched its eighth consecutive win streak, ending the week again tapping 4,780. The markets had a scare last Wednesday here when it pulled back 1.5% before bouncing back strongly the next day. So last Friday was an interesting day for the markets as it marked the start of what is called the Santa Rally. The Santa Claus Rally is the last 5 trading days of the year and the first 2 trading days of the following year. So for the US, this started last Friday, and for the Philippines, this started last Thursday, and the Santa Claus rally will end on January 3. Now, if we look at the Santa Claus rallies in the last 25 years for the PSEI, we have an 84% hit rate. But sadly, we've only seen negative Santa Claus rallies in the last 10 years. But for the US, we have an 80% hit rate with positive years in the last 6 years. So let's see how we end up in 2024. Now, opposite to the Santa Claus rally is what is called the Grinch, right? So the Grinch is the 3 trading days before and 3 trading days after Christmas. So far, we have a negative Grinch for the US and the PH. See here? So we started here, we went down, and we're here. So we're actually down, right? For the PSEI, again, we started here, and we're here. So we're actually down. So we have a negative range so far. And is this what we want? Now, if we look at the stats, right, every time we have a negative range, right, it turns out positive for the markets 18 out of 19 times. For the months after a Grinch happens, right, we see positive returns, right? But on the other hand, if you look at the times when we've had a positive Grinch, the markets experience some type of significant drawdown. So, do we pray for a Grinch this year? Yes, I guess, right? So, let's look at the data for the last 95 years during the past presidential election cycles in the US. We've generally had some positive first years, followed by a consolidation or even a drawdown in the second year, with the third year and the fourth year trending upwards. So, do we get the same trend for 2024? So we'll see. So that's it for this week. Merry Christmas to you all. Do enjoy the holidays. We will take a break next week and we will resume on January. In the meantime, please like this video. If you found the information useful, please subscribe to the channel for more updates. And again, good luck on your trades. Please manage your risk accordingly. And I'll see you again next year. Bye bye.